Good evening. My name is Tyler White, and later in this video, we will be joined by Alex Salois, Alden Dimmick, and Nathan Ward, and together, we will be presenting our financial statements for Jaguar Motor Company. We initially have got a $500 million investment from investors, and this is our seed money to get operations started. With this, we also had to come up with a balance sheet, a income statement, a cash flow statement, as well as a pro forma to best track our finances within the company. Before we start, I wanted to go over some key details that will help analyze our finances. So the average price of a car that we have agreed upon is $80,000, and the labor cost per car is $2,200. Jaguar Motor Company is owned by Tata Motors, so most of the finances or most of the data that we have found has been accumulated but with both Jaguar and Land Rover. And so their employees, for instance, they have 45,000 employees. So we thought that Jaguar would have around 22,500 employees. With this, we said that the average salary would be around $50,000. Yes, this is a little low, but we have to remember that we are including the cost of production workers as well, who get paid less than their counterparts in the sales department or in the corporate headquarters. And then we also agreed upon the average cost to produce a gas vehicle would be $15,000, and then the average cost to produce an electronic vehicle would be $30,000. With that being said, let me get right into the balance sheet. Let's dive right into Jaguar Motor Company's 2025 balance sheet. Under assets, we total $5.8 billion. Liabilities, we total $3.059 billion. And in equity, we total $2.8 billion. Now, how do we get there? Most of our numbers are from our pro forma, as well as lots of other research that we did previously. So, if we go to our assets, our first topic is inventory. Inventory totals $1.4 billion, and we see that our inventory is the total production of cars, so how many vehicles Jaguar produced, minus the amount of cars sold to get our number X, and then we multiply that by the average price. Moving on to real estate, I took numbers from the average cost of an office building that a luxury car brand would use, and the average cost of a luxury car brand dealership. So it is the average price of a dealership times the number of dealerships that we own, plus the average price of office space times the number of offices that we own. And that totals $2.7 billion. In accounts receivable, it is just our gross profit for 2025, which again can be found in the pro forma. And for our cash, it is 1/5 of our initial investment plus the remaining balance to balance out the balance sheet. Moving on to liabilities, we get to accounts payable. Now, accounts payable is the sum of our materials, or the sum of the cost of our materials, our insurance, our salaries and benefits, marketing costs, and the cost of goods sold. That totals $2.9 billion. Moving on to notes payable, we have a sum of $145 million, and that is the taxes that we have to pay out to keep our company running. In equity, we move on to capital stock. Now, capital stock is our publicly traded shares. That brings us to $1.96 billion. Our retained earnings is a negative number, which is $1.246 billion. And we find this with our net profit for 2025. Again, found in the pro forma. The owner's equity is the owner's salary from the previous 2 years, plus the investor's shares. So the investor shares is what is not labeled in the capital stock, because there was about 3.96 billion shares, I believe, or 3.86, billion shares, and 52% is owned by the public, and the rest is owned by the investors and owners and so forth. And then this brings us to our last one, which is the initial investment, which is $400 million, and that is 4/5 of our initial investment. After summing up this balance sheet, Nate will take you into the income statement.
All right, thank you, Tyler. So I'll be going over Jaguar's 2026 income statement. And so it starts off with our total revenue, which was $3.2 billion. And this represents the total amount of money Jaguar is expected to generate from vehicle sales, accessories, service, and also maintenance. So next I subtracted the cost of goods sold, which was $1.6 billion. And this includes the direct costs of production for vehicles, materials, labor, and manufacturing expenses. And when we subtract cost of goods sold from revenue, we get a gross profit of $1.6 billion. This shows how much money the company keeps after covering all production costs. So from gross profit, I subtracted the operating expenses, which was a total of $1,639,808,995. These expenses include marketing, research and development, administrative salaries, and also dealership operations. So all of these costs are required to run the business outside of manufacturing. I also included depreciation and amortization of $64 million. This represents the gradual loss in long-term assets like factories, equipment, technology investments, and also vehicles. And I estimated this using the most common automotive industry benchmark, which was about 2% of revenue. And when I subtract operating expenses and depreciation from the gross profit, we get an operating income of negative $103,808,595. This means even though the company generated strong sales and made money, its operating costs were higher than its gross profit, resulting in a negative year. So because of the company is operating on a loss, there are no income taxes owed for the year. That's why the income tax expense is listed as zero. And finally, without taxes, the net income remains a negative $103,808,595. This represents the company's overall financial results of the year, accounting after all of expenses. And now I'll hand it off to Alden to talk about the cash flow statement.
Thank you, Nate. So now I'll be covering the cash flow statement for us at Jaguar, and going from top to bottom, first covering the cash flows from operating activities. This section is really meant to break down how much money we're either gaining or losing from the business's normal operations, which for us at Jaguar means just simply selling cars. So firstly, our cash generated from operations is negative $39,808,595, and this reflects the amount of cash that we actually lost before taxes, and comes from subtracting our operating expenses from our operating revenue. And obviously, we know we're currently negative. However, that's to be expected, as we know in business, you need to be able to spend money in order to make money. And although we're not profitable right now, we see a couple years from now that we actually will end up being profitable. And so after that, we have to look at our income tax paid. And as I said before, in 2026, we actually didn't make any income, which means that we don't have to pay any income tax since we're already in the negative. So since we didn't have to pay any taxes, that means our net cash generated from operating activities stays the same at negative $39,808,595. So now diving into our cash flow from investing activities. So this section is trying to show exactly where Jaguar is spending or receiving cash on short-term or long-term investments in order to continuously grow the organization. So first is our initial investment of $500 million, which was given to us by Professor Kilfoyle. He believes in the company's future at Jaguar, with hopes of his initial investment gaining more money for himself down the road. So obviously this is a huge chunk of cash, and we'll be able to use this cash in order to help us with investments for both, like I said, in the short term and long term for Jaguar. So some of those investments include, going down the line, the purchase of property, plant, and equipment, which is essentially our money spent on things such as materials, tools, new factories, and dealerships, which equates to almost $20 million, being $19,974,400. And this information was gathered from the pro forma sheet. And also gathered from the pro forma was our product development costs, which was used to improve the design, technology, and features of our cars, as well as for the testing of these vehicles. And this costed us $1.5 million. And on top of overall product development costs, we also decided to heavily invest in AI spending, spending $2 million, which will help us again continue to innovate and streamline our processes for things such as manufacturing, inventory, overall market predictability, and our CRM systems. Now for our investment in marketing. Again, this is a huge investment of $419,055,500. As again, like I said before, in order to make money as a business, you need to spend it. So we really want to push our new direction that we're going in and make sure that the public knows and really wants to buy in, which is why advertising is extremely critical. So this money will be spent on multiple different advertising campaigns, digital marketing, as well as dealership promotions, so that we're able to increase the awareness and the new direction for Jaguar moving forward. So next is our investment in insurance, and we'll be spending $3.7 million to do this. And this is in order to protect Jaguar from different operational risks, liability, and as well as asset damages. And again, this is crucial as we want to be able to protect ourselves at Jaguar for the things that we might always not be able to control in business. Finally is our investment in our employees, which again is another massive investment at $1,193,562,545. So we uncovered this by taking the number of employees and multiplying that by the average salary of our employees, as well as including benefits in that calculation, and the owner's salary as well. So we plan on in the future hiring more employees, but obviously where we're at currently, we really can't take in too many new employees. So we decided to operate as if we had the same number of employees as the previous year, 2025. So like I already said, this is a huge investment, but it's needed as, again, we really want to ensure our employees that they're being taken care of to avoid turnover and also low morale. So even after our initial investment of $500 million, our total spending on investments was in the negative, resulting in negative $1,139,805,595. And although I've said it twice before, I'll say it again. In order to make money as a business, you need to be able to spend it, and that's exactly what we're doing here at Jaguar. So now going over the cash flow from our financing activities, which represents the money that's either coming from or going to our investors or shareholders. So first we need to include our dividend payments, and this is the cash that we're paying out to our shareholders. And even though we're currently in the negative, it's really important that we still pay these dividends in order to really show our commitment to our investors and shareholders and able to keep them happy. So we allocated $50 million towards this as we just got our investment from Professor Kilfoyle. And obviously with this new direction that we're headed, we want to be able to keep those shareholders and investors happy. So we think this is a good number in order for us to do just that. So then we're going to be repurchasing $149,282,231 in equity, which means that we're buying back our shares, which will give us the money back to our shareholders, and also decrease the number of shares outstanding. So we're doing this in order to increase our share value as well as help us gain more ownership of the company. And then finally, we'll be allocating $100 million towards the repayment of our debt. And we're doing this in order to reduce our debt and interest in the future. And although this isn't like a huge amount being paid off towards our total debt, which is, I believe, around $3 billion. Right now we're in the hole, but we still want to be able to slowly chip away at this debt until we become more profitable, and then we'll be able to throw bigger chunks of money at that debt. And so after all of our financing activities were paid out, it resulted in us having to spend $299,282,231. And so after adding up all of our expenses together, we're able to calculate our net cash flow, which ended up being negative $1.4 $7-8 billion, and this is due to the multiple different factors, like I said previously mentioned, such as our operating costs, actually losing money, investing lots of money into the future, and also our short-term investments, and also the other financing activities that I mentioned. And as a result, spending almost 1.5 billion more than we generated in revenue. So obviously, with these numbers, we really won't be able to be sustainable as a company. However, with the right plan and vision on how to achieve success, we really believe that we'll be able to do so. And so, with that being said, I'll be passing it off now to Alex to talk to you about the pro forma statement that we've created and how we plan on being profitable in just a few short years. Thank you.
Hello, my name is Alex Salois. Our group covered the financials for Peloton. It was kind of the focal point here. Developed all of our, our sheets of our, profit and loss statement, balance sheet, and our income statement based off our pro forma, which I was the one to create that. So the main focal point for our numbers were based off of, our pro forma. And basically the pro forma from Jaguar moved from 2025 to 2033. Also accounting for 2025 as year 0 and 2024 as year -1 as a performer, just to show some of the results that we've had prior to us implementing our new change with electronic vehicles. Just to kind of go over a little bit of the financials. Overall, we decided that our break-even year was going to be year 3. And that would be in 2028. This is after already the $500 million investment. First, I want to go over 2025 and 2026. So this would be our year 1. Starting at 2026, this is where we set out to be. So took our units sold. So our units sold of how many cars we're actually physically selling. And then our average car sales price. And we use that to calculate, our gross revenue. So, last year in 2025, or this year in 2025, we sold 24,250 vehicles. In the year prior to that, we took a 27% drop with 33,200. So we're going down from 33,000 to 24,000. And, this year with the investment that we've made and the decisions that we've created, we plan to sell around 40,000 cars. A little bit of a jump, nothing major right now because we're still in the works. And then our cost of goods sold would be, $40,000 as well. We wouldn't start seeing profit at all. Actually, our year -1 to year 0, we took a 27% revenue growth percentage drop, a -27%. And then the year after that was this current year, which we're projecting to be around 110 to 120%. And then our cost of goods sold would be, 1.6 billion. Moving on from that, so we have to talk about expenses. Expenses are really important in a business, especially when you're doing such a big change like we are at Jaguar. A lot investing in corporately, socially responsible activities such as electronic vehicles can definitely drive that number up. So I'm going to quickly go over all the expenses that we had to pay to develop our total operating expenses, and then off of that, our EBITDA, so our operating profit. So some of the things that we are planning for the year of 2026 are materials, buying equipment, buying all the things that we're going to be needing to do to produce Jaguar cars. And that number is going to fall at around $16 million, 974,400. Moving after that is our insurance, 3,713,150. And then more importantly, our staff salaries and benefits. So the way that we were able to get that was through a simple system of how many employees do we physically have times the amount of the average yearly salary. There is, obviously people at Jaguar that make a bunch of money, but from Jaguar Land Rover, we averaged out to be around like 57,000. So we rounded down to 50,000 to make it a whole number, just for those extra extremities of employees that aren't accounted for. So it's 50,000. times how many employees we have, which was 20,000, whatever the number was, for the amount of employees. We do want to make sure that we do know that number moving forward when writing our final report. But that's just a simple calculation of how we decided how we're going to be paying our staff. And then just as Kilfoyle did with his side-by-side business, 3% we're going to be adding each year. So like standard growth. So every year there's going to be including that. So, our staff and salaries was, $1,193,512,500. And I know that's a lot of money. But you got to pay your people well. And if you pay your people well, they do good for you. And then every year, our owner's salary really doesn't take too much from us because we really care about the business. So we took $50,000 every year with a 3% SGA increase on our expenses. But we're not really looking to get rich here. We're looking to make the company profitable. And then one of the biggest things is, our AI investment, how much we're investing in AI, as well as research and development. So between our AI investment and our engineering research and development investment, we invested $3.5 million. It's only a small chunk out of the $500 million, but we plan to put double to even more than that every single year moving forward. That way we're constantly innovating. And then our marketing, our website, our advertising, how we're actually going to get the word out to sell these products. We're going to total that at $419 million, 55,500. And obviously, we're investing a lot more into our marketing than we are in our AI and research and development. That seems a little uncommon, but this is a drastic change we're making for Jaguar. We're trying to get our target audience back as quick as we possibly can. So we're going to be trying to get commercials for football games. We're going to try to get our message out there through our website, and have maybe our names on banners and stadiums and all the different ways we can really get out there with commercials as well. A commercial in end of 2024 was the reason that we ended up falling off a little bit. So maybe the commercial can be the way to bring us back. And then every year we also plan to implement 3 new shops. And when I say shops, I mean dealerships. So for year 1 and 2, or for year -1 and year 0, Jaguar did open up some dealerships, but we just put that at 0, just for reflectiveness of our case here today. Excuse me. Moving into 2026, where we really take the reins of this business, we're planning to open 3 new shops at $1 million each. So every year from 2026 to 2033, and then on that, our projection is to add 3 more dealerships across the country. So when you take all of our expenses and add them up, you're going to find your total operating expenses. So for us, in 2026, year 1, our total operating expenses are $1,639,808,595. And, our EBITDA based off of that is in the negatives, 39,808. 39 million, 808,595. And the way that we were able to get that was to take our gross profit and subtract that by our total operating expenses. So just to remind everybody that our gross profit for the year was $1.6 billion on the nose, rounded number. Not actually a rounded number. That is the exact calculation. Minus our operating expenses, which was, $1,639,000 to get, 39 million as a number for our EBITDA. Moving into taxes, had to pay taxes, $320 million. But because that our operating profit or our EBITDA was in the negatives, we didn't have to pay any income tax expense, which was a really good thing for us. But also, it's not the best, because also you're losing money with your operating profit. But the goal is not for the first year. The goal is for moving into the second and third year. And then net profit, negative $359 million, 808,595. It's definitely a big chunk that we're losing, but it's better than 2 years ago when we were losing $1 billion. And then year after that, $1,246,000,000. So taking steps in the right direction. Moving into our break even year, really want to discuss that. So that's going to be in 2028. Our units sold, we plan to project 65,000 cars sold. Average car sale price, obviously with innovation of new vehicles, things are only going to get better. So the average car sale price will go up, especially with inflation as well too. That's going to be around $90,000, and that's going to get us to our gross revenue of $5,850,000,000. And that's a revenue growth percentage of 46% from the year prior, which was 25%. From the year prior was 120%. And that year before that was where we did the switch over of leadership, where it was at that negative 27% from 2024. So from negative 27 to 120 to 25 to 46, we're moving at a stagnant rate. You'll see in the spreadsheet that next year we go from 46% growth to 8% growth. Might be questioning, why is just sales slow down? People are just uninterested in Jaguar. But no, it's actually a good thing. We're growing so heavy that we had to hire a bunch of new employees and pay more out of salary. So it's you got to invest money to make money. And like we said, we pay our employees really well. So if we can get the pride behind them, we can get the pride behind our Jaguar users, and hopefully makes more sales moving forward at a more stagnant line. It's not going to be as many negative 27 to 120, back to 25 to 45, down to 8. Now we plan to stand around like a 20 to 25% growth every single year, moving past 2028, 2029, which is our break-even year. So moving forward, cost of goods sold was $2,925,000,000. And then that was our gross profit. Obviously, we're going to have to pay for expenses every single year. That's just a given. Everything was increased by 1.03% or 3% actually every year for standard growth. So all of our expenses, our total operating expenses, came to a total of $1,973,475,527. And our EBITDA was 210,997,147. So we're back in the black. No more in the reds. And this is due to the fact of our gross profit of $1.9 billion subtracted by our total operating expenses of $1,689,000,000. Excuse me, I'm reading the wrong numbers. The total operating expenses of $1,973,475,527, subtracted by our $951,524,473. That gets us to our break-even point. So that's really, really good for us. Moving past that, our net profit was going to be $366,524,473 for the year. So now we're back in the black. We're moving in a positive direction. It's about where we can move forward. So like I mentioned earlier, we're hiring a bunch of new employees next year. So a big change in our employees. For example, we spent $1,229,317,875 in 2027. Now, 2028, after we hired all our new employees, we're taking an increase. So it went from like $100 million extra a year. So now we're going from 1.2 billion to like almost 1.6 billion. So huge jump, and that's kind of where you see that 46% to that 8% drop off for standard growth. And basically, with our performer laid out, I'm going to send a screenshot. We're going to submit a screenshot of all of our Excel files moving forward. We put a lot of time and effort in this, and we really appreciate the opportunity to, put together some actual financial statements. I'm a finance major myself, so I kind of took the lead in this exercise. So it was a really good time to be able to, sit down and work through this case. If there's anything that, we missed out on or, should include in our final report, we're always, excited to hear it. But it's definitely a work in progress. So this is our Jaguar 2025 to 2033 pro forma. Thank you.